Good morning. This is Jack from Charting the Markets, and this is the pre-market webinar for the morning of Thursday, the 10th of April. My disclaimer: I do this for educational purposes only. I'm going to share my technical analysis with you. I hope you can take some of what I'm doing, learn from it, transfer it to your own charts. I'm not here to issue trading signals. Right? Okay. We got obviously the tariff delay yesterday, and that has given us my. I was a little concerned about the a breakdown there, which would have been unfortunate and left us without a roadmap to the next lows. But we've got our rally. It's likely to last at least 2 or 3 weeks now, and may last significantly longer. It's a 3-month tariff pause. It's only an incomplete tariff pause. I'm not sure it's paused the car tariffs. There's general minimum 10% tariff across the board, and obviously we've got the aluminium and steel tariffs already as well, which is staying on. But this does give us a decent opportunity for a rally. There are two possible targets for this rally. One is that we're making a right shoulder. Well, two likely targets. And the other one is that we are possibly, if the market gets excited enough, going to retest the all-time highs on SPX, on Dia, and on QQQ. So I'm watching out for both of those. I've drawn in at the moment on ES, I've drawn these in as potential double bottoms, and in which case, of course, on ES, that would get us back to the monthly pivot area, which is in the 5750 area. We could do a high retest if the market is encouraged enough. I think that seems a little doubtful, but it's definitely a possibility to consider. And I'll be watching out for that. All right, NQ, potential double bottom as well. Again, target area around the monthly pivot area, in the 20,000 area. And RTY, we've got a pretty nice looking double bottom actually, and that's breaking up with a target in the 2150 area. On YM, not a bad looking double bottom either. I could, I'd normally be taking a reasonable amount of consideration that these would be bear flags, and they could still be bear flags. The second low on the double bottoms were they were all slightly higher lows. But I think the strength of the move yesterday is already making the bear flag option less likely. So I'm leaning towards this not being a bear flag, and so I'm taking the double bottom setup seriously, as it is a valid one. And that is a target on Dow would be in about the 42,800 area, pretty close to the monthly pivot again. DAX and the STX didn't really have a double bottom option on there. We've moved up. Nice move, seeing a bit of a retracement this morning, not a surprise. We had a lot of 15-minute negative divergence on the charts yesterday, which is going to be playing out today, or may have played out by the open. We've on ESTX, we're getting up into the weekly pivot area. I think the monthly pivots here are legitimate targets as well. Although I would note that because these the Europeans were very late to the party, that's kind of close to the prior highs, and maybe a bit too close. Okay, let's have a look at the bigger picture charts. Okay, on the 15-minute charts, as I said, we had RSI negative divergence, RSI 5, RSI 14 on SPX, on Dia, and we had it on QQQ as well. In terms of the obvious first targets on the bigger picture are the daily middle bands. We were significantly short of that. The high yesterday was about 50 points short of that. I've got that at 55.43. On the Qs, we actually reached it. I think the middle bands are likely to break. I'd be a little surprised if they held as resistance after yesterday, but we will see how that goes. We tested it on the Qs, on Dia. We got a long way towards it. So I think we're doing a minimum of 2 or 3 week rally, and we could see something that lasts 2 or 3 months. Is this the end of the trouble this year? By no means. I suspect no means. And I'll be talking about. I was talking on the bigger picture webinar last night about doing posts on bonds and doing posts on US dollar, and really I need to get one out on the on oil as well. But the bonds one is interesting because that appears to have been the reason for the tariff pause. Because, hang on, let's move on to that on the charts down here. Hang on, wait a second. Let's have a quick look at DAX and Nikkei first. Because we've got a nice move up to, hang on a sec. Right, on DAX, nice move up. Again, looking for potentially daily middle band, although gotta say, that is still a little high. Might not make it all the way there. And Nikkei looking for a decent bounce as well. This may be an overall bear flag. We did make a lower low below 31.2K. Now, the main reason, as far as I could tell, for the tariff pause was that bonds were going wild. Dollar has been pretty calm the last week or so. I think it's probably heading down into a retest this low. Bigger picture, I'm looking a lot lower on here, into the 96, 97 area. ZB was the one that was really folding, though, and this appears to have been the reason for the tariff pause because I mentioned in my post on Tuesday last week, Brave New World, that one of the big issues here that needs to be watched is the fact that if the US dollar is going to stop being the reserve currency, which seems to be the direction of where Trump is heading, even if that's not actually directly his intention, then of course the fact that all of these previous, historic allies are holding an awful lot of bonds because US treasuries, because the US is a reserve currency, and becomes a real issue. And actually, what appears to have been happening here, as basically bond rates rose from 3.88% to about 4.44% in just over a day, what happened here was Japan was selling a lot of treasuries. Now, that would have been a lot less than 10% of the treasuries being held by the EU, being shot by China, Japan, and the UK. I think it's got $750 billion of them, and they sold a fraction of theirs, and that did this to interest rates. And real interest rates, make no mistake, are set on the bond markets. This is going to be more of an issue later this year, I think. But this is what has given us a reprieve for the time being, and this is going to remain interesting all year. And this is the reason I'm thinking that depending on what happens this year, if we have serious trouble in the bond markets, this took the 10-year yield up to 4.4%. I'm thinking, I was talking about the possibility that the 10-year yield would get up to. Oh, did I? Oh, right, okay. Sorry, apparently I posted yesterday morning's video. Sorry, I was tired. I'll fix that as soon as I'll fix that this morning. So anyway, but I've been talking about the possibility that 10-year bond yields would get up to 10, sort of 8, 9, 10% this year, and I think there's a very real possibility, and we'll come back to this. But I think for the moment on bonds, I'm leaning towards seeing a retest of this low, but the Japanese, I suspect, have stopped selling bonds, and of course they were selling them just before they came over for their negotiations, which I think are today. We'll see how that goes. All right, CL. Nice little rally here, but I'm still thinking we may well have seen a significant breakdown below the 63.57 low area. I'm watching a possible IHS form here. We could well go higher, but I think this breakdown to 55 may get followed through at some point in the relatively near future. All right, NG hung on to the falling wedge by a thread, but nonetheless it hung on. If we can see a break up over 4, then we're still potentially on for the bull scenario for retesting 4.93 and then heading up. We shall see. GC. We have what looks like a retest of the high coming, and I'm favouring that. So nice looking double bottom. I haven't marked in the arrows, but basically the target is at a retest of the high. SI could be a flag forming, but I'm thinking that GC should drag it up at least a little. On HG, this looks like a flag forming, and I think one thing I'm not really expecting to change is I think the US is going into recession. I think Europe may well be as well, and I think China certainly will be. And we are going to see a slowdown in economic activity. That is bearish for HG. I was talking about this getting back down into potentially the 2.5 area, and I'm still thinking that is a very real possibility. All right, not a lot to see on the currencies today. KC, again, the bull flag setup has held on, although I was a little concerned about it as it was getting down here. We're forming a potential inverted head and shoulders, and I'm thinking we're going to break up towards this resistance up here in the 400 area. On SB, we've got Flag not looking so good here. The double bottom is looking pretty good. So I'm thinking we could, sorry, double top is looking pretty good. I'm thinking we could well break down here. On the bigger picture, we're finishing off the right shoulder on a big head and shoulders. That could deliver quite a lot of downside. CC, we've got a very nice looking potential double bottom. The buy signal has now reached the possible near miss target. On wheat, this still looks like a bear flag for me. Corn no longer looks like a bear flag and is trying to break up for a double bottom with a target in about the 513 area. Waiting to see if that delivers. Soy, much of the soy made in America goes to China, and obviously there is no tariff pause with China. I'm thinking this is probably going to head back to retest the lows and may well go lower. On CT, I'm thinking we may well be looking at a double bottom here. And watching for resistance in the 68.50 area. If we see a sustained break up from that, we can see the 76.77 area. Looking at lumber, I think this is a rally, but it's not likely to be strongly sustained. Lumber, again, is very sensitive to economic activity. Live cattle has made the target and come off the lows pretty confidently, so I'm thinking we may well go back and retest the highs. And lean hogs, nice looking double bottom, which is trying to break up. Possible larger IHS forming, waiting to see if that delivers. Okay, let's have a quick look at questions, of which we have none. Okay, the bigger picture video, I will fix that with the other videos this morning as I'm posting stuff. So no other questions. I'm thinking we get our rally for at least 2 or 3 weeks here, and it's possible if the market gets really excited and happy that we could see a retest of the all-time highs. We have seen quite a few of those historically, most notably at the 2007 high. And I will be wondering whether we might see that. But I think we will be watching this. I will start putting trend lines together and patterns, and we will see how this develops. All right, brilliant. In that case, that's a wrap. Everyone take care, and I'll catch you guys tomorrow.